Elon Musk's SpaceX just did something almost no one thought would ever happen. It went public, and just weeks later, it officially joined one of the most powerful stock indexes in the world. The Nasdaq 100, meaning massive investment funds, are now legally required to start buying shares of it, whether they want to or not. Here's why that single fact matters more than almost anything else happening in the stock market right now. For years, SpaceX stayed private, controlled entirely by Musk, completely closed off from everyday investors like you and me. And then in June 2026, that changed. The company debuted on the Nasdaq, and within weeks it was accepted into the Nasdaq 100, an index made up of the 100 largest non-financial companies on the exchange. Companies like Apple, Nvidia, and Microsoft. And here's the part most people don't understand. When a stock joins an index like that, it's not just symbolic honor. It forces enormous index funds and ETFs, the same fund sitting inside millions of ordinary retirement accounts, to automatically buy shares, whether or not the fund manager personally believes in the company. But here's the twist that surprised traders. Right as SpaceX was entering this massive index, the stock actually slipped slightly in trading, which tells you something important. The excitement of joining a major index doesn't guarantee an immediate price jump. Sometimes the market is already priced in the hype before it even happens. Now, why does SpaceX deserve this level of attention in the first place? Beyond just rockets and headlines? Because of one specific piece of technology, the reusable Starship rocket. And this is the key. Most rockets in history have been used once and thrown away, which is incredibly expensive. But SpaceX's strategy is to reuse the same rocket over and over. And if that works at scale, it could dramatically cut costs across the company's other businesses too, from satellite internet to future space cargo contracts. Meaning this isn't just a rocket company anymore. It's starting to look like an integrated infrastructure company. Similar to how Amazon isn't just an online store, it's a logistics empire. And here's what should actually make you pay attention as an investor or even just someone curious about markets. This IPO came during one of the most AI and infrastructure-obsessed years the stock market has seen, where investors are chasing anything tied to massive infrastructure build-outs, data centers, chips, and now, apparently, space infrastructure too. So the real question isn't whether SpaceX is a cool company. Everyone already knows that. The real question is whether being forced into portfolios through an index is actually a sign of long-term value or just short-term momentum dressed up as inevitability. And that's a debate playing out on Wall Street right now, in real time, as this video is being made. So here's my honest take. I'm not telling you to buy or sell anything. That's not my job. But I am telling you this is one of the most important corporate stories of 2026 because it shows exactly how modern markets work, hype, index rules, and infrastructure obsession all colliding into a single stock price. If you want, I'll track SpaceX's performance monthly from here and show you exactly what happens next, because this story is far from over. Let me know in the comments if you think SpaceX belongs in the same category as Apple and Nvidia, or if this is just Wall Street getting caught up in the moment, and if this helped you understand how index investing actually works behind the scenes. Hit subscribe, because I'm breaking down one major company like this every single week.